Welcome to Supply and Demand Show, your go-to podcast for the latest insights, analysis, and trends in the ever-evolving world of cryptocurrency. I'm your host, Val, and today we're diving into a monumental milestone in Bitcoin's journey. Bitcoin has officially hit 100,000 US dollars. Yes, you heard it right. A six-figure Bitcoin is now a reality. Before we begin, I want to make it clear. This podcast is for informational and entertainment purposes only. Nothing discussed here should be taken as financial advice. Always do your own research and consult with a financial professional before making any investment decisions. Alright, with that out of the way, let's get into it. Bitcoin hits 100,000 US dollars. What does this mean? Bitcoin at 100K is more than just a psychological milestone. It is a validation of a 15-year journey that began in 2009 with a white paper by Satoshi Nakamoto. Back then, the idea of decentralized peer-to-peer digital currency was revolutionary and for many inconceivable. Fast forward to today, and Bitcoin has evolved from a niche internet experiment to a globally recognized financial asset. But why now? What's driving this surge? Several factors have played a role in pushing Bitcoin to this historic price point. First one, institutional adoption. Institutions have increasingly warmed up to Bitcoin. Major corporations are now holding Bitcoin on their balance sheets. Asset managers and hedge funds have launched Bitcoin-focused investment products. Even governments have started to embrace Bitcoin, with countries like El Salvador making it legal tender. Second one, macroeconomic conditions, inflationary pressures, currency devaluations, and global economic uncertainties have driven many to seek refuge in Bitcoin. It's often referred to as digital gold because of its fixed supply of 21 million coins only. Third one, retail fear of missing out. When Bitcoin gains momentum, retail investors often flood the market, driving prices even higher. Social media, mainstream news coverage, and the rise of financial influencers have amplified this trend. Fourth one, Bitcoin halving cycle. Historically, Bitcoin's price surges tend to follow its halving events, which occur roughly every 4 years. Each halving reduces the block reward for miners, cutting the rate at which new Bitcoin is created. The next halving, set for 2024, has likely already started to impact the market as investors anticipate a supply squeeze. Now that we have hit 100K, the question on everyone's mind is, what's next? Could this be the beginning of a multi-year bull run? Historically, Bitcoin has moved in cycles, typically a year or so of exponential growth, followed by a sharp correction and a prolonged bear market. But some analysts believe that this time could be different. Here's why. Number one, increased maturity of the market. The crypto market is no longer the Wild West it once was. Regulatory frameworks are being established, and more sophisticated financial instruments like ETFs, futures, and options have emerged. This increased maturity could sustain a more prolonged bull market. Number two, broader crypto ecosystem growth. The broader cryptocurrency space, including Ethereum and altcoins, is also experiencing explosive growth. Innovations like decentralized finance, DeFi, non-fungible tokens, NFTs, and blockchain-based gaming are attracting new participants and capital to the market. Bitcoin often serves as the gateway for new investors who eventually diversify into other crypto assets. Number three, global acceptance. Bitcoin's adoption is expanding across the globe. Developing countries are using it as a hedge against unstable local currencies, while developed nations are incorporating it into their financial systems. This widespread adoption could create a more stable and sustained growth trajectory. What this means for the crypto community? Bitcoin reaching 100K isn't just a win for Bitcoin holders. It's a triumph for the entire cryptocurrency ecosystem. It validates the core principles of decentralization, censorship, resistance, and financial sovereignty. Here are a few ways this milestone could impact the broader crypto community. Number one, increased legitimacy. With Bitcoin hitting six figures, even the staunchest skeptics are taking notice. Governments, banks, and corporations are now more likely to view Bitcoin and other cryptocurrencies as a legitimate financial instruments. Number two, boost to altcoins. Historically, when Bitcoin rallies, altcoins tend to follow. Ethereum, for example, often experiences significant price surges during Bitcoin bull runs. Other altcoins, especially those with strong use cases or in innovative technologies, could also see substantial gains. Number three, greater investment in blockchain development. With more capital following into this space, we are likely to see increased funding for blockchain development, leading to more innovation and improved infrastructure. Number four, community growth. Bitcoin's milestone will attract new users, developers, and innovators to the crypto space, enriching the community and fostering further growth. The risks? A cautionary tale. While the excitement is palpable, it's crucial to remember that the crypto market is highly volatile. Just as quickly as prices can rise, they can fall. Here, a few risks to consider. Number one, regulatory crackdowns. As cryptocurrencies become more mainstream, governments worldwide are ramping up their regulatory efforts. While some regulation is beneficial, overly strict policies could stifle growth and innovation. Number two, market manipulation. Despite its maturity, the crypto market is still susceptible to manipulation by large players, often referred to as whales. These entities can influence prices through large-scale buying or selling. Number three, technological risks. Although Bitcoin's blockchain is highly secure, other cryptocurrencies may face vulnerabilities. Additionally, the rise of quantum computing poses a long-term threat to current cryptographic methods. Number four, speculation and overleverage. Retail investors often enter the market during bull runs driven by speculation. Overleveraging can lead to liquidation cascades, causing rapid price declines. Again, none of this is financial advice. It's important to approach crypto investments with caution and a clear understanding of the risks involved. To understand what might come next, it's helpful to look back at previous Bitcoin bull runs. 2013 bull run, Bitcoin surged from around $100 to over $1,000, but quickly crashed, leading to a prolonged bear market. 2017 bull run, fueled by retail fear of missing out, Bitcoin soared to nearly $20,000 before crashing back to $3,000 range. 2020 to 2021 bull run, institutional adoption drove Bitcoin to a new high of $64,000 in April 21, followed by a deep second surge to $69,000 in November. Each bull run have been followed by a correction, but the lows have historically been higher than in previous cycles, indicating long-term growth. What's next for Bitcoin? While it's impossible to predict the future, there are several scenarios to consider. Number one, continued bull run. If $100,000 milestone triggers more institutional buying and retail fear of missing out, we could see Bitcoin surge to a new highs, possibly even $150,000 or $200,000 in the coming months. Short-term correction, Bitcoin could face a short-term correction as early investors take profits. However, many believe that any dip would be a buying opportunity for long-term holders. Plateau and stabilization. Bitcoin could stabilize around $100,000 mark, creating a new floor price. This would provide a more stable environment for other cryptocurrencies to grow. Bitcoin hitting $100,000 is a historic moment, but it's just one chapter in a much larger story. The journey of Bitcoin and the broader cryptocurrency market is far from over. Whether we're at the start of a multi-year bull run or a short-term rally, one thing is clear: the world of crypto is evolving rapidly, and its impact is undeniable. Remember, The key to navigating this space is education. Stay informed, stay cautious, and most importantly, never invest more than you are willing to lose. Once again, this is not a financial advice. Thanks for tuning in to the Supply and Demand Show. Don't forget to subscribe and leave a review if you found this episode insightful. Until next time, keep learning, stay curious, and embrace the future of finance.